Just watch this for a second and then I'll explain exactly what's going on.
To try and get a shark on board with my business, to provide it with a platform for legitimacy and trust.
Peer-to-peer lending for property. Never heard of fractional reserve banking.
In this type of market and space.
Doesn't understand jack shit about finance.
I'm looking for one of you guys, the shark, to be the lead investor in the first few loan offerings, to provide trust and legitimacy.
No property in this country is peer-to-peer lending except if your mum is a millionaire. That's it.
Okay, so Dave, that was 80,000 for 20%, so you're valuing your business at 400,000.
That's right.
Can you just clarify, are these loans for property only and property development, or are they just general loans?
No, so my expertise and background is in the property development sphere, and it's
but not in fucking banking.
For property finance, so developers can come to CPC in seeking alternate forms of finance to develop their projects.
Don't get up, Steve. Back.
Not based on a friggin' 10-to-1 ratio of fractional reserve banking.
Sydney, Brisbane, Melbourne. Sydney, excellent. So, are the investors providing debt, or are they getting equity in return? What is the instrument?
With the 20% of the business for 80,000.
No. In your business, as it is, the person giving the money, that investment, is that coming in as an investment? Or
it is. It's a debt investment, so that it's return for that investment.
So if the property value drops 20%, they lose 20% of their initial money in.
By having sophisticated investors invest in the platform. So
a sophisticated investor is someone who earns more than $250,000 a year for the last 2 years, or has more than $2.5 million in net assets, is that correct?
That's right, and superannuation self-managed super fund.
Oh yeah, you chuck your self-managed super into a property market that is being said by the RBA is about to blow.
Finance, you're trying to create a platform so that the little
as most American investment experts have been predicting for years.
$5,000 can group together and go alongside them. Is that what you're trying to do?
Correct. Let's understand your business model. Sure. Walk me through why this is a great idea.
Because you put 350 grand in to see it drop to fucking 300 grand, all in the hope that you're going to get 5% back after you lost fucking...
They'll get 4% return.
1/7 of your money.
And what security are you going to give the small investors on that loan?
A property that's going downhill, that's what.
So there won't be first mortgage, there'll be second or third.
It will probably be second or third mortgage because we don't have the
If you want to give someone 4% return on a mezzanine type loan, that's terrible.
What are the mezz lenders getting?
They're getting
Meanwhile, you can get 5%.
25%, and you want to give 4%? That's shocking.
And he's such a brilliant person, he never even worked that out. So you're a real rocket scientist there. No idea of fractional reserve banking and the fact that you can increase $1 to 10 under fractional reserve banking. Instead, we just want peer-to-peer lending. But it isn't like direct lending. It's like a... yeah. Several people down the line lending. The bank comes first, and then one, and then the next. It's a bit like buying, you know, subprime mortgage-backed securities, and you get the high-risk ones. Like instead of getting the higher credit rating ones, you get the B ratings. You know, you get AAA. AA, triple B, double B, and B, and you might get a B one. And what that means is you'll get a very high level of money, in the slight possibility that the white trash slacker that you lent the money to is going to pay it back. Not exactly that. It's like as though if 80% of them pay it back, then you get paid. But the other guy's got first dibs. So this guy is going to offer 4% to people who have the second or third dibs on it, while the bank gets the first bunch. Furthermore, they've got no security to back this because the bank is going to basically grab the entire lot of it. if it does go arse up. And this right on the cusp of when the Reserve Bank of Australia has released its quarterly report or whatever, some report, and in the back of that report, amongst all the mumbo jumbo, it says we're basically on the edge of the house market, just going downhill. All the signs are there that we're at the crest of the wave and we're going downhill. I probably shouldn't mention this, but on that, my sister is selling the other property she has because they have been warned by a real estate friend of theirs of the exact same thing I'm just telling you about. Yes. So one guy there says that he's already put into 2 property things and he's getting 14% return. The girl's saying he gets 17 to 25% return. This guy's got 4%, maybe 6%. Oh, fuck off! You can lend people money on the damn credit cards and you'll get more than that. And if it's peer-to-peer lending for personal loans of $1,000, $5,000, maybe even $10,000. Where you're going to get a return of fucking 10%, that's one thing. Where you're supposed to pitch in fucking 50, 70 grand, get back 4%, maybe 6%. Oh, yeah, just shove it up your ass. No financial service licenses. He's not actually the guy who's going to be doing it. He's only working for the guy who is going to be the main man behind the scenes. So he's the public face that's going to get his ass kicked when it all fucks up. And the guy who really thought of it and who is basically employing him to stand in front of these people is the front man that... the guy who's employing him to stand in front of these people is going to be the guy who fucks off with any money if need be, doesn't get himself burnt, and also has never shown his face publicly because he's got this turkey in as the public person. And it's they don't have a financial services license, I gather that, and they haven't brought it into fruition yet, which, you're not going to get a financial services license until you bring it into fruition. But then on top of that, the guy needs to get his fucking head together and understand a couple of things about banking. He's doesn't even fucking work in a suburban branch by the sounds of it. And it just, God. Anyway, he got his answer and they basically told him all to fuck off, and he went out of there with his tail between his legs after everybody said it's just crazy. And these guys who are scrutinising him, most of them are billionaires. Or people who are exceedingly successful. One guy there sold a company he had for $1 billion about 2 or 3 years ago, and he walks out of there saying, "Oh well, I'm just going to look for other avenues. We'll keep looking, bitch. I'll go get a job at McDonald's because it'll be more successful." And you'll have more of a chance of making more money and not being completely disgraced, although I'm not too sure I'd want to work at McDonald's. I think I'm a little bit too skilled for McDonald's myself.